Welcome to the budget presentation talk from all of us at KRChoksey. When I first had a glance on the speech of the budget and then probably started looking at the factual details, I found that this budget is quite comprehensive, quite a simple act actually, a very consistent approach as far as the government is concerned in projecting and building the growth in the economy. And I found that some of the key proposals are going to be game changer at the same time. When I observe that proposals like government committing themselves to a lower amount of borrowings, yet not compromising on the growth in the economy, it started revealing few things. 350,000 lakh crores of lower borrowings, which means that the government will not be a borrower in the market, and that should make the availability of funds very comfortable for the infrastructure projects, because they would in turn get the money at a competitive rate, at lower rates. Certainly RBI's policy on 8th February should find this reflection eventually. Then on the other side, I find that the government has continued to lay thrust on the economy in general, making very easy for economy and the various components of the economy to witness growth in coming period. Laying down some of the simple facts in 10 points agenda at the start of the budget and putting thrust on agriculture, giving a great signal to the rural economy that here is the amount of money which would be spent on agriculture, by asking the farmer or by providing to the farmer a roadmap to double his income over a period of 5-year time. I think it's a very, very strong message which is coming out, that eventually the government is trying to build a very powerful agriculture and rural infrastructure in the country. 10 lakh crore worth of credit to the farm sector is a validation of this particular viewpoint. Similarly, converting 1 crore kacha houses by allocation of 23,000 crores of rupees for the housing of the rural India is once again suggesting that not only the rural India gets transformed, but also at the same time the entire construction industry gets a thrust, gets a boost. Because of the availability of funds already under the subvention prices which the government has announced on 31st of December, my reading says that I think the larger amount of rural area would go for constructed property at an affordable cost. And this is going to be quite a game changer for the industry at the same time, because the construction industry along with the cement and steel business also should look up eventually. So I think it's a very, very strong segment which probably I think would have a far-reaching impact. And some of these measures are likely to promise a continued growth in the economy. The way in which some of the other proposals have been dealt with in the budget, including combining the railways under a complete transportation sector within the infrastructure. According to me, I think it gives a lot of thrust. On one side, they have started talking about giving an end-to-end connectivity solution, combining the railways, the roadways, the port and the waterways, airports, and also including the digital transportation, which is a data transportation through the telecommunication network. According to me, I think it's a very simple approach but conveyed in a very systematic manner, with a combined focus on infrastructure of amount close to 350 lakh crores. Once again, I think it's a large size sum. and at the same time not putting the entire burden on the government. The government has basically put across, I think, a small component out of it from the budget and larger component out of it from the public-private partnership roadmap, which again I think suggests that the lower amount of emphasis on borrowings and allowing the economy to grow with the private sector's participation. I think a very, very strong move coming out from the government side. My reading says that in the railway sector, the kind of thrust that they have put in with 131 lakh crore worth of amount that they have paid or allocated, a thrust will also come to the railway automation business companies who are providing solutions. The companies like ABB, Siemens, Alstom or GE, Schneider, such companies are expected to get larger favor with their order books, and according to me, I think this is going to be a very fundamental growth opportunity for this sector, these companies. At the same time, putting a thrust on private sector for developing railway stations. 25 of them have been identified for development by the private sector companies, much in line with the airports which are being developed by the private sector companies in the country and modernizing them. I think it's again going to be a very, very positive move for the business opportunity for companies like Larsen in general, who would find favor with larger amount of orders coming into them, or similar such companies who would find favor with, I think, larger amount of orders coming into them. Another area where I think they have touched upon 500 railway stations being asked to go for the modern amenities, including lifts, which means that I think the more business coming up for the vertical transportation business companies, and I think that is again going to be a positive move. So overall, infrastructure appears to be, I think, an extremely powerful thrust area, which is not only going to result into higher business only for companies, but more importantly, amount of money getting distributed through the contracts in the hands of people who are workers, and ultimately resulting into the larger amount of consumption program in the economy. I always view when government puts across larger emphasis on the spending on infrastructure, social infrastructure, agriculture, I always view this as a very strong message coming out that the amount of money which would be left in the hands of individuals would be quite significant, and that should result into higher amount of consumption. Fortunately, they have a roadmap ahead for the tax collection through this consumption in form of a GST. GST being rolled out on 1st July is expected to give larger amount of tax collection through this consumption, which should make the economy, I think, much more powerful going forward. As they say that if 1% increase in the participation, probably the collection of tax could increase by about close to 80,000 to 1 lakh crore. So I would think that 1% increase in the tax collection resulting into 80,000 to 1 lakh crore for the government could easily transform the GDP at least by 1.5 to 2% eventually. And I think that is going to be a reality as it looks like from these budgetary proposals. Another important point when I was mentioning to you about the discipline in the borrowing, which came from the fiscal deficit management. On one side, I think they are projecting lower amount of borrowings, 348 lakh crores or 350,000 crores rounded off. On the other side, they are projecting higher amount of tax receipts coming in because of the implementation of GST. And some of the tax proposals are actually very smart proposals, both on direct tax as well as corporate tax. In corporate tax, the segment which constitute 96% of the tax paying companies, which is MSE segment, medium scale enterprise companies, which constitute 96% of the tax paying companies. They have brought down the tax rate to 25%. Now, according to me, I think it's a smart move. Government may lose about 7,200 crores as per the calculation given by Finance Minister by reducing the tax rate for these companies, but more importantly, by bringing such companies into the tax fold, the government would assure a future surety for collection of tax from these companies. So the participation base is improving for direct tax through the MSE in the corporate segment. At the same time, the larger bracket companies are not being given the tax concession, which is justifiably so, that in a year when you have the demonetization effect percolating down the spine, you are not taking a very we are taking very calculated call in form of taking a moderate collection of tax and not higher collection of tax. So this may be called as a very conservative approach, but still it is better that you project less and you ended up collecting more, which they have done in this budget receipts. They have collected 17% more tax anyway. So from that perspective, I believe and I am confident that I think this is going to be a big move. Keeping the fiscal deficit at 3% is again a good guarantee that government is going to be financially well disciplined, which is unlike past. In past, governments have remained absolutely, I think, I would not say, I think, very harsh word like, I think, not remaining conscious, but the fact is that they ended up creating a fiscal deficit situation which was too huge to handle for the economy, and now I think the fiscal deficit situation is coming well under the control with 3% roadmap that has been already laid down, and surprisingly this time the fiscal deficit figure which has been announced is 3.2%. Again, I think this is sounding very reassuring because you borrow less as a government, you facilitate more amount of activity through the private sector, in turn overall economic growth improves. So I'm personally feeling that the market has liked this particular proposal, and that's where we have seen both Sensex and Nifty today went up by 400 and 150 points respectively. One of the very important point I think which I find in the entire budget is towards the focus on the corporate sector. First time government has spelled out that they want to keep all the oil PSUs as one entity. This is going to be a very, very strong message to the entire one is on the other side, I think, to the world, and at the same time to the consumers in the country, because in past oil and gas related inflation, that is fuel related inflation, has troubled this country maximum. Bringing all these companies under one roof and making one giant oil and gas major, which would be even larger than Reliance today. Reliance is going to be 100 million ton refining capacity after the completion of this expansion from 66 million. All PSUs put together would be safely above 120 million or 130 million tons of refining capacity. And between two of them, Reliance and the PSU majors, about 240-250 million tons of capacity eventually, I think, in the country would be called as a very significant amount of size. You create larger size and you attract more investors into the business, because larger the depth, larger the market capitalization, larger the participation of investors. And I think it's a very, very strong message going out to the global investors that the government is basically determined to make the success out of the public sector enterprise. And in a way, I think more amount of investors coming in, which means government would start bringing down their own stake in the company. Again, I think a very strong message going out. At the same time, giving a full thrust on listing of some of the other public sector companies gives you the promise of, I think, market very good promise that some of the good quality papers could come into the market, and one could well expect companies like Air India, companies like LIC coming up in the market for listing purpose, which could significantly add to the market capitalization of close to between 5 to 7 lakh crores between LIC and Air India. So I would think that government has silently but very, very solidly given this particular approach in the economy for growth. They have found success with the C ETFs, that is, I think, the public central ETF they call it as, which has basically helped them in successfully reducing their stake, and at the same time I think investors have participated into government companies through the ETFs. Against 56,500 crores of this financial year, I think they have projected for 72,500 crores kind of an amount, which according to me I think is going to be a very strong, once again I think, a measure for curtailing the fiscal deficit, because you realize more amount of money through divestment process as well. Within agriculture, after I think the governments move on to the listing of their companies, I think one of the significant area would be the thrust on the agriculture, where they are putting in larger amount of money into the agri farming through NABARD, into dairy farming through NABARD, into micro irrigation business. According to me, I think this is going to be once again a very, very positive move and could have a far-reaching impact. Along with the commodity markets, where the government has said that they want to bring out the new law for the spot commodity and the derivative or the future commodity to get traded into the market, and in turn provide better price discovery to the farmer, putting more amount of markets under APMC. So all of these are going to be very powerful measures coming up for the agri segment as well. So again, I think larger amount of confidence comes because there is an overall growth which the government is seeing in bringing economy up. On the other side, the taxation aspect. Market was quite concerned about the capital gain tax kind of a possibility. I think they have not touched the capital gain tax engine. They have allowed it to perform the way it is. On one side we have STT, other side the capital gain tax is exempted on equity, and there is a short-term tax on the trading business, which also has been clarified significantly by CBDT in recent months, and there is a dividend distribution tax. So all in all put together, government ends up collecting a sizable sum of money, close to somewhere around 20,000-25,000 crores, or a little more than that. So I think that area they have not touched, and rightfully so. Market has liked that. So obviously there is a confidence once again back into the market that the taxation elements are not going to be touched, which makes the point clear that the government is more keen on inviting investors into the market, which is a good sign for the market and the investors as well. Then there is a banking sector for which, according to me, some of the smart proposals have come up. Of course, I think recapitalization of public sector banks, giving them larger trust, 10,000 crores allocated, and if required more, they may work well. But I think more importantly, the banking sector, public sector banks, which are troubled with the non-performing assets. And one of the interesting proposals which I find in the entire budget is that securitized receipts, a new product which they are talking of developing, which would ultimately result in the banks to convert their non-performing assets into a securitized assets, which would probably be allowed to be traded onto the market platform. So currently the banks which are not finding way out to sell non-performing assets, these non-performing assets would find its way out through the trading by becoming a financial instrument. I don't think that many of the experts have also applied their mind on this subject, but this securitization of non-performing assets would clearly be a great signal for the banks to reduce the stress of non-performing assets from their books. Of course, I think a new law, new product will have to be evolved for that purpose. But according to me, I think it's going to be a very, very strong measure for public sector banks to get their financial health back. There is a proposal for the financial market too in the entire process that capital gain tax on the land assets, the period has been brought down from 3 years to 2 years, which means after 2 years, I think you can sell and probably you would be exempted from the capital gain tax by way of creating additional new investment products in which you can invest the sum of money that you have received under the sale of land assets, which means that hoarding of land would probably come down in the process, which would again keep the prices under control for land assets, and at the same time new financial products allowed for investment into the land asset, which would mean that more and more people participating into the financial product. Again, a good market, good business prospect for the markets where these new products will come up and get listed, and probably government would be doing this. The real estate people would be probably getting the way out to invest into them. So more thrust on the financial products vis-a-vis the trading into land, etc. So overall, these are many salient features of some of the proposals which I have combined together and I have put it before you. Again, I think the simplifying the tax structure for the foreign portfolio investors, scrapping FIPB, in turn allowing more FDI investment directly into the country, and giving a strong signal to a large part of the world about condition in the country for doing business with more amount of growth prospects. These are some of the underlying measures which I would think that they have taken very systematically. In the end, while covering up this particular subject discussion, I think I would touch upon the taxation component, on which probably I think there is also an element of what you call leaving more money in hands of consumers for spending. In nutshell, I think about 20,000 crore worth of tax concessions have been given by the government, if I may put it so. What they have done is, as I explained, MSE sector, the medium scale enterprise, those sector, I think, where the tax rate has been brought down to 25%. Of course, I am waiting to see some fine print wherein I think if they have covered LLP in that or not, I am not to cover it, because companies with less than 50 crore worth of turnover being exempted. So many of the LLPs also should find themselves into the same bracket. Why only companies? Why not LLPs? But let's wait for the clarification to come from the fine prints, or maybe subsequent clarification coming up from the government side. But assuming on that aspect 7,200 crore government is foregoing by way of tax. On the other side, the income between 2.5 lakhs to 5 lakhs in personal income tax segment is now going to be taxed only at 5% as against the 10% earlier. So which means the tax component is coming down by 50%. And suppose if somebody has taken the full advantage of Section 80C of 150,000 rupees, then probably tax rate is coming practically nil, which means that up to 5 lakh worth of income, an individual or a couple whose income remains within 5 lakhs, I think may be completely out of the tax net. Now what does it mean? This is a 20,000 crore worth of money which the government is basically leaving in hands of individuals. What does it mean? It means that on one side that money can come out for spending, on the other side I think it could go out for savings. Ultimately both savings and spending, assuming 30% goes for savings and 70% goes out for spending, I would think that about 6,000 crores would come into the financial instruments and balance 40,000 crore would go for the spending purpose. Given that kind of a situation, I would think that it should be construed as a stimulus given in the hands of people for improving their purchasing power. With this improvement in the purchasing power, I think the growth in the economy would once again be taken care of. So I would not be surprised, friends. I think if the economy grows at 8% in the financial year 17-18, probably in my summation of this entire budget and its narration, I find that it is a fantastic time for the market in general for investment purpose. Good part is that the complete investment program that the government has laid down of Making India, Skill India, Clean India, railways, defense, I think they have followed that particular program while developing or making this budget. So that is a good thing, that on one side they lay down the complete blueprint or a roadmap, on the other side they are allowing the budget also to get aligned to this particular roadmap that they have laid down. So making it very simple for anyone to understand the mind of the government at the same time. And that gives me a larger part of the confidence. We are yet to go through the fine prints because still our analyst and everyone is studying these particular fine prints. But I would like to sum it up by saying that this budget is no surprise. This budget is, on the contrary, a pleasant surprise. This budget is more a consistent document. This budget is more of a growth orientation. This budget is basically following a growth orientation. And given that kind of a clarity, according to me, market would once again start operating with the normal fundamentals of selecting good quality stocks for investment purpose. My reading says that in 8th February policy review, RBI may bring down the rate of interest by another 25 basis points, given the commitment on the fiscal deficit that the government has put across and the roadmap that they have laid down, by reducing their borrowing to the extent of 350,000 crores, 350,000 crores. So, extremely happy, extremely confident, and feel that once again this budget is giving a right direction to the investors for investment in markets. With these observations, I would like to conclude my talk. We will be coming up with a written paper on the analysis of the budget in a while from now, and we will be keep you posted with it. So some of you who may want to read it, you can read it as well. Thank you for sparing your time listening to us and taking our views. I'm sure that you would be happy to share these views with many of your friends, relatives, and in turn increase the entire knowledge sharing network that we have been building with you, which would ultimately help all of us in getting more confident for our investment activity which we carry out. Thank you once again. Have a wonderful evening and goodbye.